The market is slowly coming back to life. Bitcoin has bounced off its low, altcoins are following, and it seems that the tension after all the crashes is starting to ease. But October 29th, that's the date everyone is already talking about. What will happen on this day? Why could it completely change the entire market? And is this really the moment when we'll finally see the start of a new cycle? Today we'll break down what this week holds for us, how Bitcoin is behaving, what to expect from altcoins, and whether we're standing right in front of a major reversal.
3, 2, 1, fire!
Before we start, this is not financial advice. Everything I say is my own opinion and assessment of the market. Use it as an additional perspective, not a call to action. In my previous video, I already said that Bitcoin could show short-term negative dynamics, and that's exactly what we saw. The market fully played out the scenario. We broke below the 107,000 level, but sellers just ran out of strength after that. Around $104,000, a strong rebound appeared, and now Bitcoin is again trading in the 108,000 to 115,000 range. Now the main question, what's next? Was that rebound the beginning of a reversal or just a pause before another drop? We'll get back to this closer to the end of the video, but for now, let's look at the key macroeconomic factors that will directly affect the market in the coming days. One of the main reasons for the recent 2-week decline is the trade war between the US and China. Last week, the market looked terrible. Headlines about 100% tariffs, mutual accusations, decoupling, panic in the media. However, the latest statements are a direct signal. Washington and Beijing are sitting back down at the table. U.S. Treasury Secretary Scott Bessent officially confirmed that Trump and Xi Jinping may meet at the end of October in South Korea to discuss the terms of a new trade deal and avoid a full-scale trade war. This statement immediately eased market tension, and right after that, indexes started turning green again. In fact, signing an agreement or establishing some form of partnership would become a great local boost for the market, both for stocks and for crypto. Now let's move to the Federal Reserve, because this is where the main driver for all markets, from gold to crypto, is currently forming. We're seeing more and more signs that Jerome Powell and his team are preparing to ease policy. The next meeting is scheduled for October 29th, and CME FedWatch tool shows market-implied odds above approximately 80% for a 0.25% cut. In other words, the market is almost certain the cycle of tight monetary policy is coming to an end, and this isn't just rumors. Powell himself has said several times that the end of balance sheet reduction, QT, may come in the coming months. QT is when the Fed reduces the assets on its balance sheet, effectively pulling liquidity out of the market. A pause in QT would likely ease liquidity conditions, which can support risk appetite. That, in turn, means conditions for crypto growth are becoming better than at any point in the past year. In addition, in his recent speeches, Powell emphasized that the labor market is starting to weaken. Hiring is slowing, layoffs are decreasing, all signals that the economy is cooling down. That gives the Fed an official reason. It's time to cut rates to support economic activity. But a logical question arises. How can the Fed make such decisions if the US is still in a government shutdown, with no funding for the third week, and key macro statistics, from employment reports to CPI, aren't even being published? Here's the key point. The Fed is an independent body. It doesn't rely on Congress for funding, so even during a shutdown, it can hold meetings, make decisions, and act autonomously. Moreover, in the absence of official data, the central bank relies on its own analysis, private research, models, and high-frequency indicators. And interestingly, this uncertainty could actually push the Fed to make a cautious move, to lower rates proactively to prevent a sharp slowdown in activity. So even despite the shutdown, the market already expects that by the end of October, we'll see the first real policy reversal by the Fed. And history shows that such moments often mark the start of a new major growth cycle, not only in the stock market, but also in crypto. And overall, we should remember that by the end of this month, there could also be progress on US and China tariffs. maybe even full normalization of relations, which could be another strong positive catalyst. So mark October 29th on your calendar and keep an eye on the news. Considering the fact that the market is currently walking on thin ice, it's crucial to have a strategy and not try to guess what happens next. That's why I've gathered for you the key indicators that can help you assess the market more rationally and give you a clearer understanding of what's really going on. In fact, I'll show you several very important metrics that perfectly illustrate the behavior of institutional players and the market as a whole. In my Telegram channel, I'll share links to the websites for each of these indicators mentioned in this video, so you'll be able to explore and analyze them yourself. The link to my Telegram channel will be in the description below. Let's start with the main one, ETF flows. Last week brought nearly $1.2 billion in outflows from Bitcoin and Ethereum ETFs, among the largest moves we've seen. And while it looks worrying, the situation can change quickly. If we see capital returning this week, even partially, it'll be a very strong signal that institutional players are coming back into the market. Next, the US dollar and global liquidity. It's simple. When the dollar weakens, everything else rises. BTC, gold, equities, even altcoins. And right now, this is the main factor that could support the market. When the dollar index, DXY, trades under 106, risk assets tend to perform better historically. But if it goes back above 107, you should be more cautious. That means investors are fleeing to safety. Another crucial metric that many ignore, the 10-year US Treasury yield. When it drops below 4.1%, the market is basically whispering, the Fed is going to cut rates soon. And that, in turn, supports crypto. But if we see a move back toward 4.4% or higher, that's a sign of tension, and capital will likely flow into treasuries and gold. Then there's a very simple but equally important indicator, the crypto fear and greed index. Many think it's too basic and doesn't reflect the real state of the market. But at the time of recording this video, it's sitting around 29 to 30 points, showing a state of fear. Typically, anything below 25 is an accumulation zone, while 50 to 60 marks the FOMO zone, where it's better to take profits. In my previous video, I told you that we were at the peak of fear, and that was a good sign for us. Since then, the market has risen sharply, and the index has climbed from 22 to 29. So yes, even though it's simple, this indicator still gives a clear picture of the market's emotional state. So friends, if you don't want to miss more exciting videos, sharp market analysis, and reviews of key indicators alongside altcoin updates, make sure to turn that red button gray and subscribe to the channel. Your YouTube feed will instantly become richer with valuable and high-quality content. But friends, if you think it's all that simple and the market is purely positive right now, you need to look deeper. Not long ago, I told you about a crypto whale who made around $200 million during the recent crash. He shorted the market literally hours before the flash crash. Now he's once again building up shorts and currently holds a Bitcoin short worth about $77 million. And here comes the tricky part. Is this a new short position ahead of another major drop? Or just an attempt to predict the next move? Or maybe it's a psychological game, and he's actually hedged with longs on some centralized exchange? It's an open question, and everyone must decide for themselves. Personally, I prefer a balanced approach. I track more of these large players to see what they're doing. And of course, keep an eye on the indicators, because that's where the truth lies. Now, let's talk about the Bitcoin price outlook. What scenarios do I see? The base case for the next 2 to 4 weeks. Trading in the 107 to 115,000 range with a gradual recovery toward 116 to 118,000 if macro conditions remain neutral and we see stabilization in spot ETF flows. Over the weekend, Bitcoin already tested below 107,000 and rebounded strongly. But let's not forget, in a negative scenario, like a full-blown trade war or a reversal in Fed rate policy, we could see a deeper drop. What do you think about this? Share your thoughts in the comments. I'd love to know your opinion. Friends, thanks for watching. Like this video, subscribe to the channel, leave a comment. And remember, this video is not financial advice, just my personal view of the market.